Hello, and welcome to BeLoanReady. How does my credit score impact my mortgage options? Very early in the mortgage journey, someone will ask you about your credit score or ask for permission to run your credit report, leaving some of you asking, why? Or, what is a credit score? If you ask the Google machine what a credit report is, you get, a credit report is a detailed report of an individual's credit history. Now, a credit history is a snapshot showing whether you made your debt payments on time or not. For instance, it will show if you made all your car payments, student loan payments, and credit card payments on time, or if there were a few payments that were late. A credit score boils down all of your repayment history found in a credit report into a single number, or a set of numbers. Okay, I know what you're thinking. I've heard people talk about FICO forever. But what is FICO? FICO stands for Fair Isaac Corporation. FICO is the largest and best known of many companies that provide a method for calculating a person's credit score. A FICO score looks like this, and is summarized by a 3-digit number ranging from 300 to 850. So what do these numbers mean? Basically, the higher the FICO score, the better your credit profile, which gives you a better chance of getting a mortgage. Now that you're a wizard on scores and credit reports, wouldn't it be nice to understand the magic behind the scoring system? In the simplest terms, FICO scores are comprised of 5 parts. Your payment history. Are you paying your bills on time? Late payments drive down your FICO score. How much you owe. Do you have a lot of outstanding debt obligations? Length of credit history. The period of time particular debts have been outstanding. This establishes that you know how to pay your bills over time. New credit. How much new credit have you recently taken out? And finally, other factors. Roughly 10% of your FICO is represented by other factors. We could tell you, but we're not wizards of the highest order at this point in time. But seriously, the actual FICO formulas are secret. We suspect it has something to do with the 11 herbs and spices, though. Plus nutmeg. It's always nutmeg. Now we know what a score is, and what characteristics determine a score. So does my FICO score have an impact on my mortgage options? The short answer would be yes, big time. You see, most financial institutions and mortgage lenders will utilize the FICO score as the greatest determinant in calculating a mortgage interest rate. In some cases, lower FICO scores could make you ineligible for certain mortgage products. Let's take a deeper dive on this and break it down further. A higher FICO score will get you a lower interest rate than a lower FICO score. A FICO score of 740 or higher will generally qualify for the best interest rates. A FICO score below 620 may greatly reduce your chance of being approved for some mortgage products. The difference between the best and worst FICO scores can vary the interest rate by 1.5%. This is a lot. With all this in mind, you can see that FICO score is an extremely important factor in determining whether you are eligible for a mortgage and what interest rate you can expect. Why are different interest rates offered for different scores? This can be summed up with one word: risk. Borrowers with higher FICO scores have a history of paying their debt obligations fully and on time, compared to lower FICO score borrowers who may have in the past had some difficulty making timely payments. To recap, a credit report and your score will determine financial eligibility, interest rate level, and even which types of mortgage products you can obtain. And as always, if you have any questions, don't be afraid to hit the help button, and a mortgage mentor will be right there to assist you. Thanks for listening, and I'll see you in the next video.